Okay, good morning. A very good morning to everybody. If you're on the live, hello, whatever time of day it is. If you're watching the recording, it is Wednesday. It is 8:30 in the morning and it's a stunning day. And welcome to the live show where my aim, as usual, is to break down the stats and the headlines that are coming out from various sources and try and dig one level further to actually put all of these into context with the main aim to allow you to make better investing decisions in the property space. Look, as ever, stats can be skewed in any way. Mass media, mainstream media likes to create sensationalist headlines to bring you in. I want to get through all that guff and fluff and actually see what's going on. So as you come on, please say hello if you're on the live. Ask questions as we go. I'll come back and answer them at each little bit. And if you're watching this on the recording, put the questions in the comments as well. Before I do crack on, I've got a request for everybody. If you're new to the channel, I started the channel 2.5 months ago, and I'm currently on, I guess, what I consider the run into 1,000 subscribers. So if you are looking for property data, stats, getting through the rubbish and understanding how to invest in property in whatever the market is, but finding that data and those signals that can help you invest, please do subscribe, like this video, subscribe to the channel to make sure you don't miss on future episodes. Right, so what are we going to be covering today? As ever, we've got a lot of things to get through. We have the Nationwide HPI House Price Index, which came out yesterday. So as per the thumbnail title, HPI showing an uptick up. So we've now got two of the major indices, Halifax and Nationwide, both showing upticks in prices. Does that mean we've hit the bottom? Are we seeing a reversal in trend? We'll look at it in a second. We're going to go into week 16 stats, which is stats that's put out by Chris Watkins in the estate agency world. Got some fantastic data that we can look through and really use that data that he's put out to see what's going on from sort of transactional point of view. But again, just to dive right in and picking out some of those major items which kind of stood out to me about what's going on. We're going to look into that. We're going to talk about supply of housing. The one thing, the big argument that the property bulls have is that there's a supply-demand imbalance in the UK, which is absolutely true. And sort of macroeconomically on a long-term basis, I'm always quite bullish in property that there will be that supply-demand issue. So prices long-term should, hopefully, go up. Let's not talk about inflation adjusting and all that sort of stuff. However, short-term, what are we seeing in supply? The big thing that I believe has propped the market up so far is that lack of supply. If we see an increase in supply, does that mean prices are going to come down? Help to buy. So we can talk about some government incentives. What's the government intervention going to be to the property market as we run into the next election? And also the re-emergence of 100% mortgages. What does that mean for the housing market? Is it a good thing? Is it a bad thing? So as always, guys, that's what we're going to be covering. Please say hello as we come in. Make sure the audio is working all right. I know last week we had a bit of an echo. I think we had a feed from the iPad, which I tried to mute. So if you hear any issues with the audio, let me know. Right, let's crack on then. So Nationwide HPI, this is very brief. Figures are out in April. We saw an increase in 0.5% in house prices after 7 consecutive falls. So as I said, we've got two indices now, both showing upticks in house price. Of course, straight away, everybody's out on social media going, look, told you, we're seeing a reversal. It's just a little blip and we're seeing a reversal upwards. Do I believe that's the case? My thoughts here are not to tell you what I think, but just give you the various possibilities and the probabilities of what's happening. From a probability point of view, okay, I still think we've got three scenarios. One is that we continue in an uptick. Two is that we have a 90s style, longer and a shallower correction. Third, which I think is the most unlikely, is a really sort of 2008 style crash, which really needs a black swan event to trigger that. And it's a credit crunch in the last point. I still feel we are looking more for a longer, shallower correction. Nothing goes up or down in a straight line. You know, we're still seeing in the Nationwide annual house price is less. It's only 2.7%, but it's still annualized is less. Okay. We're also, now I know this data lags, so we're probably looking February, March sort of data. Without a doubt, there has been an increase in sentiment. I would suggest since mini budget, since Christmas, come back into the new year, a little bit of resurgence of sentiment, you know, some conflicting data means some people think we're going back up. This time of year, we also always see a bounce in sentiment. Sort of March, April is probably one of the biggest bumps up in terms of house price listings, for example. And that's actually interesting because Rightmove put out its stats for April, showed I think it was a 0.2% increase in asking price. But when you actually compare that with normal April average is about 1.2 increase in asking price, because you get that sort of spring bump. So actually, it's about 1% down to where it usually is, which I think is interesting. Don't forget, look, nothing goes up or down in a straight line. If you look at the Wall Street cheat sheet, psychology of a market cycle, okay, when we get to the top and come down again, we generally have something called a dead cat bounce, where people think it's come down to the bottom, we're going to go back in, but they've come in too early. Are we seeing that? The honest answer is there is no certainty that we can tell that. Property market is not like a stock market. It doesn't quite have that liquidity and sort of rapidity in how we see the data. The thing we always have to look at with property markets are trends. And all markets are trends. So with Nationwide, 7 consecutive falls, 1 tick up doesn't mean it's a reversal in trend. If I'm honest, same with Halifax, I would say we're still in a trend down. When we break the next trend line, which is, going past the peak, then, we could say there's a reversal for sure. Right. I did talk about consumer confidence or confidence, and it's obvious when you go into the media or you go into social media, there is definitely an uptick in confidence as we are coming into the spring. And this was an interesting chart that was in the Nationwide HPI, where we look at confidence both in personal financial situation and general economic situation. And you can see down on the right-hand side there's a massive spike down, which I would have thought probably coincides with the mini budget in September, October time. And we've now been recovering from that. We're recovering from that, but if you look at it, yes, we got a trend up. You can still see that confidence is low, right? If you track that back down to 2008, okay, we're about the same level as we were in 2008 in the financial crisis. So it's hardly like everybody's in euphoria and going, everything's brilliant, we're out of this, and everything's going to shoot back up. We're seeing an uptick in trend, but it's still low in terms of confidence. Let's add that into what we've seen with the inflation figures that came out a couple of weeks ago, which are stubbornly high. Next week, we have the next interest rate meeting at the MPC committee. The consensus is interest rates will go up again. How far it goes up, we do not know. Now, it might not, but I think the consensus is it will go up again. Some people are even, analysts talking about will it go up to 5% this year? When we look at mortgages, and I'm not going to go through mortgage stats again today because I've done it to death over the last few weeks. When you look at mortgage expiry, we've got about 1.5, it's between 1.3 and 1.5 million people coming off 2% and less mortgages in 2023. And if we're now seeing interest rates go up to 5%, okay, we're going to see increased squeeze on affordability. Okay, so we're going to be interesting to see how that pans out. All right, so that's the HPI. That's the Nationwide HPI. Let's look at some stats. These are very kindly put out by Christopher Watkin using 20EA data. So I just want to talk through these. So we've actually seen in week 16, and by the way, what they do is they go through each week and compare it to previous years. We're seeing an increase in supply. Now, this is where I really want to delve into stats, right, and put stats in context, because when I was seeing these figures being talked about, if you look at week 14 and 15, there was a massive drop-off of supply. And the question was being asked, why was that big drop-off supply? Well, let's just zoom out and look at what was in week 14 and week 15 of 2023. Week 14 was the week including Good Friday and then Easter Sunday, and week 15 was the week including the Bank Holiday Monday. So you got a long weekend there, which basically means week 14 and week 15 of 2023, okay, I've only got 4 working days, and each of them have got a bank holiday. Now, this is actually, important to understand what's going on with these stats, because I saw these. I saw the headline like, UK housing market sees best week since the mini budget. Okay, we would expect it to carry on a curve, and we'd also expect the full week after the Easter long bank holiday. So week 16 is now the first full week after the 2 bank holidays. We would expect to see a bit of pent-up demand coming out in that week. And we have seen that. We've seen supplies go up. When we look at the graph of listings, okay, if we actually look at that sort of snake on the right-hand side, you can see all of those years we're tracking along. So we start in January really badly. It's tracking up during the year, and then we have a dip down and come back up. Now, Easter falls on different weekends every single year, okay? So that's why you can see on the right-hand side here, that sort of dip down and go back up. It's very much in different weeks of the year, depending where Easter is. So this is exactly what we'd expect to happen. We'd expect to see a dip down and sort of a peak up. I would say, looking at this data, what is interesting is I would say there's quite a big bounce up this year, quite a big bounce up in listings after the Easter weekend, and I think that's interesting. The reason I think it's interesting is because I think we're seeing more supply coming onto the market, and I'm going to talk about supply in a bit. I don't want to go into supply just yet. Okay. Now, if we look at net sales, which is total amount of sales through estate agencies minus the fall throughs, we need to again understand this in the context of Easter. Okay, so if we look at this, 2023, week 16 is out of the Easter bank holiday, so we've got 19,430 net sales. 2021 is the last time week 16 fell out of the Easter, so 29. So the direct comparison in terms of the Easter break, the first one is 2021. Okay, 2022 straddles the Easter bank holiday. I believe 2017 and 2019 also straddles the Easter holiday. So the other one I think that's out of the Easter bank holiday 2 weeks is 2018. All of the rest of them, the Easter bank holiday on either the Friday or the Monday falls in week 16. So actually that looks like quite a lot lower in terms of net sales. So we've seen lots of listings, but we're seeing less sales overall. What can we think about that? Are we seeing more fall throughs? Because we've got listings coming on, but the net sales is down. So are we seeing more fall throughs? And again, when we look at accumulative net sales, we're still, for the whole year, we're still considerably lower than the average. Okay, so we're 93.1% of the 2017, 18, 19 average. I personally think that's statistically significant on how down we are. Now, yes, we've got the after effects of the mini budget that are falling through into probably January, February, maybe even March, but we're still down, I would say, a significant amount. Now, we have this table of national stats that was the final part of the analysis by Chris. And again, this shows all the weeks, week 1 to week 16, color-coded. And I believe, I don't exactly know what the color code means. Looking at this, it would be if we're increasing month on month, it's going to be a shade of green. If we're decreasing, it's going to be a shade of red. We can see, again, lots of red at the beginning of the year, which we would expect, coming to more green. And then you can see week 14, week 15, there's quite a lot of red in there. Again, the majority of the Easter holiday weekends sit in week 14 and week 15. So that's where Easter is falling most likely, or most consistently. Now let's look at week 16. If I'm going to try and zoom in on week 16, okay, there's some interesting things I want to pull out of week 16. That number at the top is listings, 36,132. That is a significant amount of listings, which for me means we're getting more supply into the market. The next thing that is really jumping out at me is that big, massive red box that says 5,477. Now, that 5,477 is sales that have fallen through. To me, that is a significant uptick on sale fall-throughs in week 16. Now, what does that mean? We can spin it however we want, but the way that I look at it and we read it, and when I'm spending a lot of time on Rightmove, I see property prices, I see how prices are progressing, how many price reductions are going in. It feels like sellers are getting more realistic with selling price, but buyers are also getting more twitchy about the prices they're buying for. So, with the amount of time the conveyancing takes and the whole process takes, these could be sales that were agreed months ago, right? And they're now falling through because buyers might be pulling out, or they might not be able to afford a mortgage. They might not be getting the mortgage they need with tighter affordability, tighter checks from the banks. So we're definitely seeing an uptick in fall throughs. And then the other one that strikes me as fairly large is this one at the bottom, 24.49, which is the difference between listing and sale price. And that's been going consistently up as well. And that to me is quite an extraordinarily large number, that the difference between the average listing and sale price is almost 25%. So on average, properties are selling for 25% less than they're listing for on average. Now, that seems crazy to me, and I don't know the exact source of the stats, but That's what I feel is being shown here. Okay, so that's another interesting stat. So we're seeing a bigger difference in listing versus sale price. So when you look at the Rightmove index and it's talking about listing prices, I kind of view that as vaguely irrelevant. Rightmove listing price, but they're selling for a lot less. A lot of fall throughs and a lot more supply coming on to the market. Okay, so we're seeing a combination of factors here. Don't worry too much about this. This is just the analysis I did of when Easter fell, so we could have. Oh, by the way, an interesting some interesting stats. So I normalized all of the weeks in terms of Easter to look at the listings between the week before the Easter double weekend, the week with Good Friday, the week with Easter Monday, and then the week following. And actually, the pattern for 2023 has pretty much followed the same as all previous years. If it's red, it means I don't have the data because we're not far enough in to get that data in the year yet. But the pattern has been followed pretty much exactly, with percentage drop-offs over Easter. I would say the one thing that is higher by quite a lot is the percentage change, okay, from the week of Easter Monday to the first full week back after Easter, okay. And in this case, it's a 30% uptick. Now, I haven't got the data for 2022, 2019, or 2017, but in 2018, there's a 25% uptick. In 2021, a 17% uptick. In 23, there's a 30% uptick, okay, in property listings from the week with the Easter bank holiday, the Monday bank holiday of the Easter weekend, and the following week, 30% uptick in listings, which is a big uptick. Is that a case, potentially, that people have had the long weekend, they've been thinking about it, looking at the state of the market, come back and gone, right, now's the time to list. We want to get our properties sold now. Now, that could be because they think the property market is reversed and they're going to get a better price for it. It could mean they think it's going to go down further and they want to get rid of it now, okay, in the best selling time. So there's been a big uptick there. I think that's interesting stats. Okay, before we crack on to housing supply, please just make sure that everybody's here and the keyboard's working. Say hi. If you get hello, if we get some value from this, hit that like button. As I said earlier, please do make sure, if you're not subscribed or if you're new to the channel, to subscribe to make sure we can see this data and these stats, and say hello as we are on the live stream. It's always good to make sure. By the way, we're building a community here. I don't want to just sit here preaching. Let's have conversations. What are you guys seeing in the market? What are your thoughts, by the way? Do you, we've now seen upticks in Halifax and Nationwide. Do you think we've hit the bottom? Do you think we're reversing? Do you think it's a little blip as we go into the best-selling season of the year? What do you think? Let me know. I'll be interested and fascinated to know what your thoughts are. Okay, let's go on to housing supply. This will be a quick one. So this is courtesy of UK Property Line. Interesting Twitter channel I found, actually, who lists all price reductions or large price reductions they're finding on properties. If you look at this graph, we can see that post-pandemic, the property supply fell sharply. And what was that? The base of that is sort of the beginning of February 22. And since then, the supply has been rising. Now we hit the peak of the market, probably summer 22. So when you look at lag and all that sort of stuff, that kind of ties in to the bottom of the supply. Bottom of the supply is the top of the market. And then we started coming down as the supply came up. The property bulls argument for short-term, medium-term and long-term property growth is the supply-demand equation. I'm going to do a dedicated video on this because it's really interesting. There's lots of factors here. It's not just a case of there isn't enough supply. But we're definitely not hitting building targets. If those building targets are actually relevant, the 300,000 a year that the government has set, is that a relevant target or not? And planning is increasingly, local councils and planning departments are abandoning their local plans. That is a great argument for supply staying low, propping up the housing market. I have always said since beginning of last year when I made the decision to sell my personal house, that the market will be propped up by a lack of supply. The moment we see a flood of supply, we're going to see prices coming down. And we're seeing a big increase in supply right now. Now, whether that continues, we don't know. Whether this is, different in different niches, because we spoke last week about there's a clear movement of people, first-time buyers, going to smaller, cheaper properties. I would imagine, if you look in the data, my hypothesis will be there'll be people who've taken bigger houses out over, pandemic, cheap money, They've now come into the cost of living crisis and mortgages coming out. They're probably selling up larger houses, going into smaller ones to save on affordability. So we're seeing, a change of people to those larger houses into smaller, more affordable units. So certain parts of the sector, certain parts of the industry, are going to have an inverse of this, right? I would imagine. I was speaking to my property cash flow accelerator clients yesterday, some who are seeing sort of price rises quite aggressively still in their investing areas because they're in Northwest or South Wales, where you've got lower price, higher yielding properties. And therefore, if investors are looking for better returns, it makes sense if the cost of borrowing is going up, then people are going to have to look further afield and go to lower price point, high yielding areas, right, to get the returns that they were getting. And of course, in those areas, that's going to then have an inverse effect on the supply demand curve. So there's going to be a lack of supply of those properties. More demand is going to push prices up in local areas. So whenever we're looking at house prices, the UK, Nationwide, Halifax are quite crude indicators of the UK as a whole. It's super important to understand your personal and particular area, investing area, buying area, because there are going to be very different regional variations. Okay, but we can see supply coming back. Okay, so before we go into government intervention, I'm going to play a clip. Sorry, I just need a bit of a tea. I'm going to play a clip from a video I put out about 6 weeks ago. Now, I think when again, I talk about following the breadcrumbs quite a lot, talk about trends quite a lot, and right now, I just cannot see from a mathematical point of view, from a sort of an economic point of view, inflation high, and it will come down at some point, but the question is when. How long will it stay high? Food inflation is ridiculous right now. How long will that inflation stay high? And what will that cause to interest rates? People talking about 5%. If interest rates do go up to 5% over the next few months, that is going to just keep acting like gravity to house prices. And it's not going to crash them, right? But I do think it's going to act like gravity to keep pushing them down. Those are the trends. I've always said that things can come in, external factors which change trends. Ukraine-Russian war, switch in government policy. So I just want to play this clip that I put out in a video about the banking crisis about 6 weeks ago, and then we'll talk about government intervention. The question remains, how bad or deep will the banking crisis be in 2023, and what effect will that have on property prices? If we continue to raise interest rates, this will act like gravity on property prices and continue to bring them down. Things could get ugly. But we're also coming up to a general election in the next year or so. If things get too bad, will policies be reversed? Will money get pumped back into the system, which will inflate assets to a point where they could catastrophically fail further down the line, rather than a much needed and more gentle correction now to bring prices back in line with everybody's affordability? So you can see from that I'm actually think a correction now is very healthy for the market. Affordability, that sort of gap between prices and affordability has been widening. When we look at some graphs, and I'm looking forward to the next nationwide affordability report coming in, it's actually narrowing, and that makes sense. It should be narrowing right now because house prices have come down a little bit, and actually wages have gone up. If we adjust it all for inflation, okay, that affordability is actually probably getting closer. So yes, wages have gone up in nominal terms. When you adjust them for inflation, they are dropping in real terms. Okay, so post-inflation adjusted wages are dropping, but at a lower rate than property prices have been dropping when they're inflation adjusted. I think we're actually, if you adjust for inflation, property prices are actually down, I think, over 10% since the peak already. Everybody talks about nominal, i.e. what's the actual price. They're not talking about inflation-adjusted property, and that's so important because we have to look at an inflation-adjusted, which is the actual real value of something that our money can buy us. So that affordability gap is closing right now, and this is good, right? This is healthy for any market. Any market that goes up will inevitably have some probably event where it just pops, right? Rather than letting some of the air out, letting everything catch up before we get the next leg up. So I feel what's going on right now is very healthy for the market. If we change policies or something comes in that sort of stops that correction and makes it go up rapidly again, I think that could lead to a more catastrophic event. So, government starts pumping money back into the system. We get cheap debt again. And as prices continue to go up, right, it will go more dramatically. So what's happening right now, I think, is positive. But I saw this over the weekend. We're already starting to see the posturing for the election next year. And there's lots of options on the table, but something that is back on the table is Help to Buy, which of course ended last month. It's one of several policies they're looking at. But the point I am making is that government will be looking for wins for the next election. They'll be looking for policies. They have to give house homeowners something. The Tories will not want to lose the vote of the homeowner to Labour. So inevitably, there will be policies that will prop up the market and maybe artificially adjust the course of the market. We don't know right now. I don't think it's going to make any effect this year because the election is probably going to be next year. I don't know exactly when the date is. And then I'll be amazed if anything happens this year in terms of policy change. So it's more likely that it'll come in next year. And we've probably got the best part of a year to run before any of those policies come in. So I don't think it's going to make a massive amount of difference. Finally, let's talk about the mortgage market. Okay, so another interesting thing I've seen is talks about return of 100% mortgages, which is interesting, right? Because you think, wait a minute, how are we going to be why are we bringing 100% mortgages back in a potentially dropping market in a time when everybody's talking about banking crises and credit tightening up? What's all this about? Well, if we look at this, and I've only got to February data, February 2023 data, so we haven't got March data or April data in here, but I'd be interested to see the next graph that comes out for this. This is mortgage approvals, and you can see since that mini budget, September, October last year, how they have just crashed off, and we got the lowest level, certainly in February, of mortgage approvals, let's ignore COVID for a minute, since the financial crisis of 2008. Banks are money-making entities. They're profit-making entities. They make money by lending money, right, charging an interest on. So therefore, if we're seeing a sharp drop-off of mortgage lending, it follows that banks are going to have to be much more competitive to get people to take their products. Now, we've seen a massive increase in mortgages. So again, something the property bulls say is like interest rates dropping, loads of different options for mortgages, cheap mortgages again, and we've now got 100% mortgages. This is brilliant. I kind of look at it in a different slant. I see it that there's not a lot of mortgage lending going on, so the banks are having to be super aggressive to get business in. So I think on average at the moment, is it 5-year fix? You might be seeing 4.3%. I'm not sure exactly. I haven't looked at the mortgage market for the last week or so. 100% mortgages are almost like a final bid, I guess, to get people's business. Now, whether or not you're going to qualify for one, I don't know what lending criteria they're going to put to it, affordability criteria. But the problem with 100% mortgages is they are risky, right? They are risky entities. For the main reason that if you're getting a 100% mortgage in a dropping market, the chances are you're going to be in negative equity quite quickly. It means it's risky for banks because if you're in negative equity, it means they've got no collateral, they've got no security in that property anymore. If you have to repossess and sell it, they're going to lose money. So therefore, the interest rates are going to be so much higher to offset that risk. And I'd imagine the affordability checks are going to be quite high. So there's a huge amount of risk there. And the other thing about 100% mortgages, right? Let's say you get a property on a 100% mortgage on a 25 or 30-year term. The majority of what you're paying for the first however many years is interest. So actually, it's like, okay, if you're going to be in that property for a few years and then look to move, is there really any point buying it when you save the stamp duty and just go and rent and have that flexibility? You're tied in to that until you're out of negative equity, if we're in a dropping market, okay? Obviously, if we're in a rapidly rising market, it's potentially a good investment to make because you have no money, buy a property and it goes up in value and you make money. Fantastic. I suspect that's not the market we're going to be in for the next year or two. So yeah, risky, 100% mortgages. Is it a last-ditch effort to sort of pump some energy into the housing market? Is it banks just fighting for business? I'd love to know your thoughts on that. So where does that take us? So slightly more quick and dirty roundup of the week's news. Still half an hour in. Let me know your thoughts. What are your thoughts on the market at the moment? To clarify, I do not make predictions on this. I want to go through the data. Looking at that data, my gut feeling is we're seeing supply increase, we're seeing fall-throughs of sales increase, we're seeing asking prices come down quite a lot. That, to me, at the moment, are leading indicators of where we might be going. The trailing indicators are the HPIs, but they're trailed by such a long way. It's very difficult to really understand what's going on now looking at the trailing indicators. The leading indicators for me are all still pointing down on property prices over the short, and when I say short term, I mean 6 to 12 months. So just go through that again. Supply increasing. We are seeing potential interest rates go up next week. Be interested to see what happens. If interest rates go up, will mortgages go up? We're still seeing hundreds of thousands, if not into the millions of people coming off cheap fixed rate mortgages this year. That affordability is going to bite people more. We're still seeing sticky and persistent inflation. It will come down quickly at some point, but the question is when. Will it come down this year? The analysts are saying yes, but looking at things like the food inflation, they don't even talk about the CPIH, which is inflation when you look at house price. So CPI does not include house price inflation, by the way. So if you look at CPIH, it's on a trend up at the moment because of the lag in the system. So inflation is high. Interest rates are probably going to go higher. A lot of people coming off cheap fixed rate debt. Supply is increasing. Sale prices are diverging from listing prices by quite a lot, and a lot of sales are falling through. For me, it still indicates that we're not bottomed out and we're going to be going down further. If I just go over to the head down, I drew this on the last live and talked about the various possibilities, the various scenarios and probabilities. Okay, and my thoughts are still that this blue line here, okay, is the most likely probability of where we are going to go over the next 18 months to 2 years, which is a longer, shallower correction. I believe a healthier correction. We don't want this red crash that destroys people's lives. I struggle to see a position where we're just going to take off and go back to the races without major third-party intervention. Doesn't mean it's not going to happen. Okay, that's my thoughts on the housing market today. I'd love to pass over to you and see what your thoughts are. And if anybody would like to ask any questions on anything property related, now is your chance. Let me know. Let's get some comments in. How are you seeing it? How are you seeing the market, team? Let's find that keyboard and chat. I assume I've got comments on. I'll give 10 seconds for questions. And I'm back into the office. It's funny, isn't it? When you type, when you finish off, the view count goes up. People come on when you're finishing off. Okay, as always, if you want to ask anything afterwards, drop me a line on the comments. I'm more than happy to answer any questions. It's been an absolute pleasure, as always. This week, I'm putting out a video on Airbnbs and what's going on in the short-term rental market, especially with more government intervention there. So make sure you stay tuned if you're into short-term accommodation, either if you're in it already or you're looking to get into it. But otherwise, team, I'll see you on the next update, which will be next week after the MPC committee, and we'll see what happens to interest rates. I'm looking forward to that one.